What's up, guys, and welcome back to the channel. My name's Jordan, and today we're going to be talking about a simple strategy that has outperformed the S&P 500. They say that over 80% of hedge fund and mutual fund managers cannot outperform the S&P 500 benchmark. But today in this video, you guys are going to find out how you might be able to beat the S&P 500. So what I've done is backtested a strategy from 1995 to 2019, which is a 24-year period. And I've created a document for you guys to follow along and interact with the data. So just below this video, there will be a link that will take you to my blog post in which you can click on the document and you can view it for yourself. If you guys have had a strategy in your head that you wish you could backtest, comment down below, give a detailed description of the strategy, and every single day I'm going to pick one viewer's response and backtest their strategy and do a whole report on it for you guys. So without any further ado, let's dive right in. So to get the document, head over to Facebook and search for Backtest Group. Click on the Groups tab up at the top. And we are this one right here. So there's only one member. It's just me right now. And it has a picture of the NYSE. So just click on that. And so I've posted the document right here. So just hit that. And it'll download right there. And you can open it up. And so what this strategy is it buys the S&P 500 every time it goes above the 200-day simple moving average, and it sells the S&P 500 or closes the position when it goes below the 200-day simple moving average. So the blue line here is the simple moving average, and that's just the average price of the last 200 days. Then we have our buy and sell signals. And here's our total position. We also have what our cumulative P&L was and what our drawdown is. So for this back test, we started with $100,000. And after 24 years of trading this strategy, we ended up with about $291,000. So we almost tripled our money. When we compare that with the S&P 500, you can see the strategy outperformed buy and hold. So the black line is the strategy and the red line is buy and hold, and you can see we wildly outperform. And here are the drawdowns. The drawdowns are never as severe for our strategy. Like in 2008, we really cut out a lot of the drawdown right here. So how this strategy works is it starts off with $100,000 and it always invests its total amount of capital that the portfolio currently has. So here we can compare the two metrics. So here we're comparing the S&P 500 returns relative to the strategy. And you see we outperform. You can look at the distribution of the returns. I also included a graph that shows you how the strategy compared to buy and hold for every single year. But when we look at the stats page, you can see that the annualized Sharpe ratio and the Kalmar ratio was much higher than buy and hold. Our total return was also much, much larger than if we just bought and held. The only thing that was bigger, though, was our annualized standard deviation. And that is because of the whipsaw of hopping in and out of the strategy. Our worst drawdown was 11% less than buy and hold. Here you can see the actual trades. So here the order quantity. All means we just close out the position. So we bought 1,573 shares here, and then we close out the position here. For this, I did not add any transaction costs. However, there weren't too many trades, so it wouldn't have made a big impact. And here you can see all the metrics of the trade. And the reason why this strategy works is it cuts your losses. So you're never in the market during a recession, as you can see here. You're in for a very, very small time here as we went slightly above the SMA 200 for a bit. But in 2008, you were never in the recession. You were never in the market during the recession. You were in cash. And that's the whole point of trend following, right? Is You let your winners run and you cut your losses. And this strategy implements that. So if any of you want to beat the S&P 500 with a simple filter, this is what you want to look at. Everyone can implement it. And almost every single charting platform provides you with a 200-day simple moving average. Well, guys, if you like this and you want to backtest your own strategy, let me know in the comment down below, and I'll make sure to get your strategy out, and we'll go through a rundown of your strategy. All right, guys, that'll do it for me. Cheers.